One of the things I wanted to ask about is using this thesis of kind of the mining sell pressure. Walk us through what you expect to happen over the next, call it 45 days before the halving, what happens at the moment of the halving, and then maybe what happens in the 3 months after the halving, and then kind of 18 months out. So going into the halving,
Absolutely.
at the halving, 3 months after, and then 18 months after that.
Yeah. So we initially put this report out to our investors and clients in January. So we were kind of expecting this sell-off, and we think that Bitcoin is probably in a trading range, and it'll continue to stay in quite compressed margins for miners going into halving. Now, once we go through halving, the miners' revenue is going to get slashed in half. This is when we're going to experience what I call, I think it's going to be a healthy cleanse of the network. We're probably going to experience difficulty adjustments. If Bitcoin is still at 8,000 or lower going into halving, this is when we're going to get extreme miner capitulation. Probably 30, potentially 40% of the network shutting off. Anyone with power above 2 cents running old generation equipment is going to blow out. Miners with mid-generation equipment like T2Ts, the in-silicon machines, those are going to blow out if you're at 4 cents or higher. And individuals running the newest equipment at 7.5 cents, 7 cents, high sixes, they're going to have to shut off. So I basically just listed off about 40% of the network. And that's in the report. We really lay all that out. Now, what is that? It's not a light switch. People can't just turn off their machines, and they're not going to just turn off their machines. There's friction. People want to hope. People have utility contracts where they have to consume a certain amount of power. Otherwise, they lose their long-term contract. They might be in hosting facilities where if they default on their payments, then they lose their mining rigs. So if you just bought thousands of dollars worth of mining rigs, you're going to keep paying your bill for 2 or 3 months until you blow out. People are in facilities and they have to pay, their lease payments. They've built out all this infrastructure, so they're still mining the rigs. And once they start defaulting on rent, which might take 2 or 3 months, then the facility kicks them out. So we think once halving hits, we're going to experience this massive difficulty adjustment because inefficient miners are going to shut off. And we think it could take maybe May through potentially July of friction, of people shutting off, people wiping out, throwing in the towel, and completely shutting off. And that's when we're going to actually get difficulty kicks in and margins are going to get better. The efficient miner should not fear halving. They should welcome it. Their margins, we've analyzed it, and we believe that margins of miners at 6 cents and lower running the most efficient equipment, their margins are going to be about the same pre-halving and post-halving after all these miners shut off. And it's because they're going to get the Bitcoin so those miners who shut off, about 40% of them, once they shut off, that Bitcoin's got to go somewhere. It's going to go to the people that last. Mining is about survivability. You just need to survive. If you survive, difficulty will adjust in the future, and it's gonna improve your margins because the people that are inefficient, their Bitcoin is going to go to you.